It's me, Pavitran here. Today we're gonna do a weekly forecast. What are the levels we should be watching for the coming days? As I said on last week that it's trying to form a bearish channel. As you can see, this was the first lower high. This was the second lower high. This was the third one, and exactly price had was sustaining somewhere in the range between this trend line which I have drawn, the bearish channel. It was taking support at the first lower low, and we can see the second one, the third one, the fourth one. So I was expecting a range bound to continue until the trend line is intact. I was mentioning the same level somewhere around the recent high, the Friday's high and Tuesday's high has to be broken for further bull rally. As you can see, what had happened on Monday, negative opening, and followed by that breakout has happened, but it was not able to go still further. It was sustaining till afternoon, or even till evening. It was trying on sustaining in that range. Once it had tried to break the upper trend line, it was facing rejection, and from there fall started, and it fell till the lower trend line. As usual, new lower high, lower low has been formed. This was the recent lower high, and this was the newly formed lower low. So as you can see, it is well below the recent one. So we can expect that maybe a trend might continue, but maybe around 9:30, I don't know what is the news that triggered a sharp recovery has happened, and it was trying to break the today's high. So if it had broken the today high and closed, then we can assume that some buying pressure are still in the market, and buyers are not letting a price to go down further. As you can see, on the next day I was expecting a further upward rally, since the main reason was price fell down, and a sharp recovery attained at that region. If you can check the price action, it will be kind of an hammer, small hammer, or you can even say a small doji. That was the reason why I was expecting a trending day on Tuesday. I even posted a video that I was expecting a market to trend further. Every dip is a buying opportunity. My levels were somewhere around 41.30 to 41. From there, a small bounce had happened, but after that, it went down again. From $40 level, bounce have happened, and the day ended at so a slightly, or I can even say a more of a sideways range. The next day, then it came to the same level which I mentioned, and from there the bounce had happened. So it was still obvious that price was trying to make the same uh, bearish channel till now. As you can see, if you can connect the recent one and this one, maybe we will get a new region over that region. So it's pretty much obvious that for us that it's still in the bearish phase. There is no possibility that it has to break the new ones, or it to go to make a new higher highs. Still this upper trend line is existing, then we will be finding a lot of uh, resistance over the top, and we can even see it will try to form a new kind of a pattern, because this pattern won't be valid. The trend line just been broken. If you can extend this one, it will be broken, so that won't be valid for us. We can even delete that. For reference, I was keeping that. Once it gets broken here, then we have to look for a new trend line, whether it will take a resistance or supply. On a lower side, we don't have any trend lines gets forming. On upper side, there are two trend lines which you should be very careful. On horizontal level, you can check with 40.80. This is the first support, this is the second one, this is the third one. Here it has broken and retested, but it went away, and it has taken support in this region too. Finally it had broken the support here, then it price kept on falling. and as you can see, this was the origin of the rally. um, as I usually used to say, if origin of the rally has happened, that is the place where huge buying pressures and selling pressure will be in the market, so that will act as an quite stiff resistance or support. As you can see, this was the place when market tried to come here, a good bounce had happened. After that, market has broken that level, then prices started to fall. And during recovery, you can see when price touches, the price goes near to that level, it is finding a stiff resistance over that region. So anywhere, if a good sharp recovery or if a huge rally has happened, you have to search for the origin of the rally, mark that place, because whenever price tries to come to that region, there will be a huge maybe either buying or selling based on the trend. On this is case, buying pressure is tried to come near that, but since it was very clear that trend is sell on rise, in market had fallen. Once it has broken off, then you can see it will try to test that region. It will try to break that, but it will find a stiff resistance over that region. So this is how a major support or a major resistance will get formed. A huge buying order will be lying in this region, which won't allow the price to sustain above that level. Maybe still RSI is on a daily basis, it's somewhere around 55 to 40 region. So that implies that a slightly bullish mode is still on until RSI takes support at 40. It can even break 40, it can even go there, or it has to take resistance at 60. If it starts to take resistance at 60 on a daily basis, then clear bull ride will end and bear ride will start. Until then, there will be a range bound movement, whether bull will take into action or bear will pull the market down. So it will be a kind of a confusion over there. We need a clear cut action. Until then, be a sell on rise. This is because I was saying for the past 2 months, fundamentally crude is very weak, and we can expect a fall on any day possible. Maybe this was even a slight of indication that I was explained to you previously, that many divergence has formed and fallers are started to come. This was the first indication. It was formed a low still in the market. This trend line is also giving a good example that bearish channel is still in play. And on a Friday or on Thursday, a good fall had happened. On the Friday, I was expecting a little retracement. After that, a good fall will happen, but unfortunately there was been a slight retracement after that fall had came. And I shorted somewhere after 7:30 candle. I shorted after the candle close, I shorted at 20 in Indian market. 30-20 I shorted. I booked around 2090. I booked around that was somewhere around half an hour trade for me. Since it was acting in a range bound, I was not expecting a market to fall another 100 point. If it had retraced, or if it given a retracement of nearly 30 to 50 points on upper side on in the morning, then I would have expected some 100 points rally. But as you can see, after this huge fall, market tried to go in a recovery mode, and after that market had fallen. Then at the opening of the candle, it was somewhere sustaining around this region. Then slowly market bounced to the higher level, then it fell down, then again it tried. So that was a kind of a range bound movement which has stuck the market on Friday. After that, as usual, at opening of an American market, price tries to come down on the 17 on 1930, that is during 7:30. I shorted at an opening and booked 30 points. Market, it was still a sell on rise, but I was not sure that whether it will break the low which has been made on Thursday, because a huge buying pressure has kicked in the next candle. Even I mentioned on Thursday that buying pressure might come in, since on 1 hour time frame we have formed an hammer at the bottom. So this was the price when price was trading at this level I mentioned. After that, if we had taken a trade, but stop loss is very much high, maybe we can even say a low probability trade, because stop loss and target, if it won't get matched, it's a kind of an counter trade, because a trend was clear sell. We are just going in for a retracement trade, so we can't expect another huge rally. A small rally on an upside is still possible, but stop loss is way more than somewhere around $1 levels, nearly to $1 levels. For $50, for 50 cents, taking a risk of $1 is not affordable. I shorted at I went long at somewhere around this candle. I was expecting a buying pressure, so I just went long in the small retracement. I booked at this candle itself, maybe around 20 to 30 points over that. After that, I was expecting a retracement again to this level, but retracement did not come. Small retracement, and then it went up. So I was not following up or chasing the price. I left as it is. I thought that I will see tomorrow if retracement come on the morning, then I will short. But to me, utter failure that retracement to my expectation did not come to the level I was expecting. I was expecting on a morning to break this level, or even to take a resistance at this level. I was waiting for a market to short somewhere around 40.80 level. That was the level I was waiting. This was a good candle. I thought price will go further higher, but it started to fall from here itself. But the fall was not very much satisfied. Whenever a huge slight fall came, and then the next candle the price is starting to reverse. So that's why I exited my position over 530, which I took after this red candle. This was the red candle at 130. After this I said I'm going short, maybe around 20, I think 30-20 I booked, 30-20 or 30-25 exactly, I can't able to remember the position. I shorted there, and I was keeping my trailing SL at 30-10. This was somewhere, it gave somewhere around 20 points over that. After that, at slightly around 530, I think 430 or 530, yeah, this is the SL triggered. This was the SL trigger. This is a candle that triggered my SL. After that, I was expecting price to go further higher, maybe around 3070 or 3080. That synchronizes with 40.80 level. But at 7 o'clock, price, the red candle has formed. Before the candle finishes, I updated my group that if after the candle close, I will be shorting in the market. And the same exactly, I shorted at 30-20 and booked at the end of this candle somewhere around 2990 or 2990 I booked. And after that, you can see price retraced. I missed that, and after that it started to go in a range bound mode. So whenever price tries to go in the range bound mode, there is no use of trading for me. And I have also updated you guys that whenever market is going to trend, whenever I feel that today or tomorrow it's going to trend, I will just upload a video saying my levels. There is no use for me to say the levels. And for market is sustaining in a range bound, no one will get benefited by that. Only on a trending day it will be easy for us to make a fortune, not in some choppy markets. I am strictly against that. So what are the levels you should be following on coming week? Is that just the same as sell on rise? The new level which has been formed is 40.50. Just to be aware of that. As usual, remaining everything is same, 41.50 on upside, and 42.50 still on the upside. It will act as a resistance. On downside, 39, and this you just keep a new low of this is a new low which has formed 38.70, which will get synchronized with 39.50. So these are the level you should be watching on downside. 39, and once it breaks 38.5, then as usual 37 and 35.80. Still price remains on a sell on rise mode. It's obviously very clear that price is still sustaining below that recent high which has formed somewhere around 42.50. Can't able to break that. And if price tries to come near that 41.50 or closed above 42, then you can we can see able to some range bound moves. Once it breaks off 42.50 only, we will see some bull action on a strong that will go near to 45, or else as usual for the past 2 to 3 weeks market will be acting as a range bound. The same will be in continuation. And today's or coming week range, maximum range what I was predicting is that 42.50 will be the maximum on an upside, and on a lower side 35.80, that is on a lower side. Most probably that 42.50 won't get breached, because it's pure sell on rise market, and it's clearly in an bearish channel. I was expecting the trend line to be intact. Let's see how this goes on. Thank you.